The following is a presentation of TFNN. Live at TFNN, The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the June 3rd terrific Tuesday edition of the Money Masters Show. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential, folks, that's something you and we must master each and every day. So let's begin our day with empowering beliefs. The three forces of life. You know, the three forces of life are knowledge, time, and effort. Force number one is knowledge. And today, most of us, we'll have 3 meals, maybe a few snacks. Hopefully, there'll be some green juice in it, maybe even a shot of wheatgrass. You know, we will feed our body. But the real question is always, are we going to feed our mind? And each day, we should be setting aside $10, $15, $20 a day for an education fund for our mind. For things like books, for workshops, for newsletters out there. The reason being is we get a constant flow of ideas, and many of those ideas, they become an inspiration. The best money spent is the money spent to cultivate the genius of your own mind. Yes, folks, feed your mind, for the money spent is a small price to pay for the promise of your unlimited potential. Force number 2 is time. You see, time is simply irreplaceable. And gaining knowledge, it takes time. There's always 2 ways to acquire knowledge, either by trial and error, or we can hire a coach. Someone who can teach us shortcuts, one that can compress decades into days. Each will get us to where we're going, but one will get us there faster and, quite frankly, with less cost. Force number 3, it's effort. Huge difference between what I call casual learning and serious learning. And effort's the investment that will open up the floodgates of ideas. So put forth the effort, and guess what? Light bulbs will go off. Remember this, always spend the money, the time, and the effort to achieve your outcomes. These are the investments that will turn on your lights and start turning your wishes of wealth into reality. It is Terrific Tuesday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we've got the Dow. It is trading down 27 points right now. It's trading out at 16,716. S&P off 1 point, trading out at 1923. Composite up a point right now, trading out at 42.38. Russell 2000 up 4 pennies. She's trading out at 11.28. Apple up $8 this morning, trading out at 6.37. That's literally leading the charge here to the upside. It's up $8.40 right now. Interdigital IDCC up $7.60. Hillshire Brands up $4.80. Emerge Energy EMES up $4.70. Acadia Healthcare ACHC is a ticker symbol. It is trading up $3. G Triple I Apparel Group GIII. It's trading up 3.5%, up $2.86. Netflix up $2.40. Tesla up a couple of bucks. To the downside, Ensign Group Inc., not to be confused with Ensign Software. ENSG is a ticker symbol. It is trading off $20 right now, down 42%. Holy schmolies out there. Let me see what this is all about. They're spinning off. That's what's going on. So they're spinning off a business and so forth. In any event, trading off $20 and change. Priceline down 14. Wynn Resorts off $7 and change. Clovis Oncology down 677. Theravance, boy, that chart looks pretty nasty. It's trading at $22.73. I believe that's headed to the $16 range, maybe even $13. It's got a to B equals CD to the downside. Google off $5. Centien Corp down $2.81. Our call number is 877 927-6648. Give me a call, folks. Happy to take a look at your stock chart. Answer whatever question I can. My apologies. I was multitasking here while I'm doing all of this, and maybe that seemed I was multitasking, and you didn't even know it, which would be nice and smooth. But now that I'm multitasking, I'm looking for my stock chart that I want to put up on my screen. Is this it here? Well, it's not, but, oh, there it is. No, yeah, there it is. There is the daily chart. I want to take a look at the daily time frames out here, see what we can see. So let's go take a look at the indexes. Let's go see what kind of signals we've had out here the last couple days. We'll start off with the NASDAQ composite. It's trading out right now at 42.37 and a bit of change, so it is flat on its trading session out here. It did have a what's referred to as a bearish reversal signal. I don't consider it a bearish reversal signal. That's the hanging man candle. That was on May the 30th. Looks like a hammer, smells like a hammer, only it's coming at the uptrend. It is suggested that it's coming towards the end of a uptrend out there. I would have to say that it's really up. You come all the way back here. It's this evening star formation that began on April the 3rd out here. That's really your reversal signal. Price coming back into that area. What the composite needs to do to fend that off is get above the high of the trading session from April the 2nd. That price point, by the way, is high as 42.8609. That would be very bullish out here. Do we see anything bearish inside the NASDAQ composite just yet? The answer is no, we do not. Let's go take a look at the Dow Jones Industrial Average. The Dow right now trading out at 16,718. It's dealing with its own evening star pattern, which price did close above slightly yesterday. That is the May 13th high. The number is 16,735. You're trading at 16,718. Did it close? Yeah, it closed above it yesterday. Just slightly closed above it. That is resistance. It would be very bullish for the Dow to close above that level of resistance, that little bearish engulfing / evening star reversal pattern out here. In order for it to really get bearish, you're going to need to see it close below 16,636 out there. That's another 400 points to the downside. That is on the Dow Jones Industrials. Let's take a look at the trannies. Let's go see what the transports are doing out here. On its daily chart, nothing bearish about this pattern out here, at least with regard to the trend being your friend. These are the Rhodes momentum indicator signals that we're looking at. In the transports out here, light blue area, that is telling you long and strong. Blue skies out there. Yellow is just offering you a caution light, and that in this case here is kind of like the cars driving around the Indy 500. Caution light is on, but they're still driving at about 150 miles around the track out there. And that's during the cautionary time. Well, it's probably about 100 miles an hour, 100 and a quarter or so. Let's take a look at the NDX 100. Let's go see with the NDX. Not going to be really any difference here from the composite that we took a look at. You can see no bearish reversal signal on its daily chart here as of yet. It is running into resistance, which is making a 100% move of a move. That's testing the high out here from March the 6th. That high, by the way, I think we have seen the Qs here do the same thing. Test that high here from March the 6th. Do it on lighter volume out there, if I'm not mistaken. I don't recall if it did it yesterday, but I know it most certainly did it on Friday out there. And the Qs, as well as the NDX, did have a key reversal session out here. So I do take this back. There is a bearish reversal type signal out here, and that's this key reversal session that took place on May 30th. That says it's important here for the NDX 100. Good Lord. To get above the, keep hitting the wrong button, to hit above the high of 37.41.57. It's trading at 37.34 right now. That's what's going on inside the NDX. Let's go take a look at the Russell 2000. Russell 2000 here, has recently, what Russell's been doing here, it's got some bearish signals up here over the course of the last couple of days. Bearish engulfing from May 30th out there. Doji candle the day before. The Doji candle's not a bearish reversal signal, but it was telling you the market was tired. The leaves fell off the tree the very following day. What do I mean by that? Well, we saw price closing lower, moving lower out there. But, of course, what price did here yesterday was it came down into the gap up. That was the May 23rd to May 27th session out there. It is important here for the Russell 2000 to continue to hold that gap as support. That gap being the high of May 23rd, which is 1126.20. Closing below 1126.20 today would say that price inside the Russell 2000 likely to come back and test the hammer candle all the way back down at the May 15th area, that being in the range of 1082 to 1099, and that is what's going on inside of the Russell. If we take a look at the SOX index, let's go see what the SOX is doing. SOX index right now trading out at, man, oh man, this thing is on fire. 608, is that right? Yeah, it is. 608.42. Oof. I'm going to go take a look at, we'll pull up my other charts out here. So the semiconductor index, man, this thing is just simply on fire. Looks like it is completing or trying to form a butterfly pattern. Let's go to my butterfly tool out here and see where that would actually come in at. But strong looking patterns out here. What we're going to do is we're going to take a look at the expansion of swing points inside the SOX. That's going to be the April 3rd high at a price point of 601.40 and down to the low that came in on April 15th out at 558.71. The 1.272 expansion, 613. Yeah, that's where the SOX is headed to. It's at 608.31. Of course, if it gets to 613 today, that's going to be with a wide-ranging bar as it were to get up into that area. But it looks like that is where the SOX would like to move to. Let's go take a look at, where's the chart here? Let me put it back up on the screen. After looking at the SOX, let's go take a look at, do not be short the SOX index. That is for sure. Take a look at the semiconductors. Let's take a look at the S&P 500 out here. S&P 500, well, nothing bearish about this. If we take a look at yesterday's candle, just a small-bodied candle, that's all out there, so no big deal. Today, flat session traded at 1922 right now, but no real reversal signal here yet inside of the S&P 500 on its daily charts. Let's take a look at the XAU out here. Let's go take a look at the gold trust. And let's go see what we have out here. Nothing but bearish signals after going ahead and forming that price relative strength divergent top back on May the 14th, doing it with a evening star out there. And the pedal to the metal has been put to the floor on the way down inside of the XAU. It does look like it, too, wants lower price out here. And lower price takes you back into the December time frame out here as its first area of testing. And that is the December 19th. Swing point low. That price point inside the XAU is a low of 79.73, the high being 81.19 out there. So that's what's going on inside the indexes on their daily charts. If we switch over, we take a look at the Qs here right now. Take a look at the Qs. Oh, so here, the Qs here had a, this is interesting, because I didn't see this. Well, not... we had a little, what looks like a doji candle on May 30th. I got to really blow this up and you'll see it. You see, if you just look at that, you'd think, it's just a doji candle. But you see, if I blow it up, see how it turns just slightly red out here? Just slightly red. It's blushing. It was blushing because that was a key reversal session. That's where the intra-session high and low from the prior day was exceeded, and it was closed in the opposite direction after coming from an extended condition. And there was a little bearish engulfing candle that occurred here yesterday. So the Qs, the real strength of the market, is the one that's actually given us the biggest signal that it actually wants to rest. 877-927-6648. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Hecht has just announced a live 90-minute webinar that he'll be hosting Saturday, June 7th from 9:30 till 11 a.m. Eastern Time, entitled Energy Opportunities During the Summer of 2014. With the frigid winter having depleted some key energy stockpiles, Russian political tensions high, and the storm season for the Gulf setting up to reverberate through energy markets worldwide, opportunities could present themselves over the summer months that could provide huge payoffs. When you sign up, you'll gain immediate access to a 7-page report Andy has put together as an introduction to what he'll be covering, so you can start preparing and get a feel for what Andy will be discussing live during the workshop on Saturday, June 7th. Andy will be advising his attendees of at least one trading recommendation in each area, including crude oil, natural gas, coal, and refining spreads and oil products. The best part is that this live 90-minute webinar is only $99. Don't wait. Sign up today and reserve your spot while gaining instant access to Andy's 7-page report right now. For all the details, visit the front page of TFNN.com. You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 27. S&P is down 2 points. Composites off 90 cents. Relatively a quiet, flattish type market out here. Russell 2000 off a couple of points as we speak right now. Let's go check in on some of these stocks here. Let's go take a look at our core holdings of stocks. Let's go see where things are headed to. Let's start off. Let's take a look at Apple out here. So you've got Apple trading up by $8.33. It's leading the charge here on the way up. It's trading into the session from a couple of days ago, May 30th. Had good volume out there. That was volume of 20 million shares, so it does suggest that the top of that should be tested. Let me see here. The real resistance where Apple is trying to head to, it's got this little gap down. Fairly good volume inside the gap down, 22 million shares or so. That says resistance should be the 651.28 area, and it looks to me like that is where Apple wants to head to. In a overbought condition out here, but I believe that what does Apple do its stock split? I didn't really pay attention to when that occurred out there. Obviously has not occurred here as of yet, but it is sometime soon, that's for sure. Anyway, that's where Apple is headed to. If we take a look at Microsoft, let's see what Microsoft is doing. Been in a little bit of a sideways consolidation after passing the B point here. Looks like with volume, the B point of an A to B equals CD. That was from the trading session out here on, December 4th. We'll put the volume bar across the screen. Did it cross it? Yeah, cross it with volume. It most certainly did. That was on March the 18th. Says that it would like to trade up to about 42.67. We can see it's really been trading sideways since March the 19th. So just building, and also it had gotten into what? It had gotten into an overbought condition back here on April the 2nd. So it has been really trading sideways to work off that condition, which it successfully has done. Maybe comes back and test the swing point, its most recent swing point, May 7th. 41 million shares down there. Test that area somewhere between 38.51 to 39.51 before it decides to try to take off topside. That's what's going on inside of Microsoft. If we take a look at J.P. Morgan out here, J.P. Morgan just simply struggling. It had a most recent downdraft from May the 5th out here. Did that with a gap down with 25 million shares. Right now that area is holding as a resistance line. So it's got a bit of resistance. This is J.P. Morgan trading up today at 55.49 out here, but it's got plenty of resistance. Its next level of resistance, its ultimate level of resistance that it has to contend with is the April 10th low, 57.38 out there. Good size gap with some volume. Google, let's take a look at the googly eyes out here. Now, if we take a look at Google from its high down to the most recent low out here, which was on May the 7th, what Google's done is a 0.618 retracement. The question is Google forming an A to B equals CD to the downside? That A to B equals CD to the downside would give you a price projection of about 457.64. That would actually take you all the way back close to a very large breakout area. That might set up a nice buy inside of googly eyes. That would be down around the 448-ish, 442 type range. That's where you have a wide-ranging bar, accelerated volume. That was on the trading session of October the 18th out there. Let's look at Amazon. Go see what Amazon is doing here. Amazon trading lower this morning, back at about the 306 area. Amazon struggling big time. What Amazon wants to do, in my opinion, at a minimum, is trade back into its trend line. This is a trend line, an important trend line because it goes back to 2008. This is a weekly chart that we're looking at, by the way, on my screen out here. It's a trend line that has held since 2008. It's been tested on many occasions out here. That takes us into the price area or range of around the 270s or so, 275, 265, somewhere right in that range out here. And that is on Amazon. No indication that it wants to do anything other than that as I take a look at the weekly chart for Amazon. If we take a look at Priceline here this morning, Priceline does not look too shabby. Really, Priceline had broken through its trend line, its downtrend line. It broke through that with some conviction on May the 21st out here. If we do take a look at retracements, though, from high to low, let's go see what level it's made. It's above the 0.618 retracement area, which is 1267. It looks like Priceline wants to try to make a move to the 1316 area, the 0.786 retracement. If we were to do that, one would really have to be paying attention to the volume as it cleared the May 29th high of 1292.66, volume of 810,000 shares out there. But the stock of Priceline doesn't look too bad with the exception of this high volume low that has not been tested, and that's from May 8th at a price level about 1087 to 1152. Dow's off 31, S&P down 2. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's off 32 points right now. S&P off a couple, and we were taking a look at some of our core type stocks out here. IBM being one of them. We didn't take a look at IBM. IBM right now trading out at 184.40. Now, what's interesting about IBM, it's trying to, or it has formed a little Gartley buy pattern out here. Let me go ahead. We'll redraw that in, and what we're going to use here is we're going to use the low is going to be this hammer candle that formed down here on May 29th. Now, that's really important. And because of the weighting structure with inside of the Dow out here. So here's what the Gartley pattern looks like. You had a trend to the upside. That trend ended with a little shooting star reversal pattern. That's the opposite of the hammer candle, by the way. So the shooting star is up at the highs. That says resistance is that candle session, 199.21 out there. Interesting. That formed the high. if we take a look at the A to B equals CD down that formed the lower, the 0.618 Gartley buy pattern, we'll see that was formed with the hammer candle right here. Type 1 hammer candle, by the way, out there. That doesn't get much stronger than that out there. That says very important support at the price level of 182.33. And it looks to me, the way that IBM is trading today, it also looks to me like IBM, when I took a look at the Rhodes momentum indicators, it's still in significantly bearish mode out here. We've got sellers that are truly in control of what's going on inside of IBM. So what happens if that hammer candle gets broken, that 182.33? It says if you were long, you're wrong out there, and that means that price then ought to move back, and that moved to the 0.786 retracement level. But I would say at this stage, because there's really no base out here, that what IBM ought to do is get back to the February 5th area. That's right around 172.19. So it's formed a nice Gartley buy. It's done a 0.618 retracement. It's done it with a nice hammer candle out there, some follow-through on the very next trading session, but it's still the sellers that are in control of IBM's stock as we speak here right now. And that says that low of 182.33 is muy importante for it to be able to hold. Spiking down and testing it, no big deal out there, but closing below it, that is a big deal. Now, I believe the number one weighting structure is Visa. I've got to go back and take a look at it. The top 5 weighting structure, that is for sure. That is Visa inside of the Dow. Let me just make sure I've got an updated chart here. Visa right now is trading out at 212.10 out here. It looked like it was trying to form a 0.618 Gartley sell pattern, but it's got a ways to go before it gets up there. It's only been up to a high here back on Friday of 215.95. That's a bit too far away from the 219.70 area. That would set up a nice 0.618 Gartley sell pattern. Is Visa in big trouble? Well, what Visa's in trouble with is it's got this high volume low here that has not been tested from July 31st, 2013, 170.99. That's really what that Gartley sell pattern is all about inside of Visa. So that doesn't bode well for one of the heavier weighted instruments with inside of the Dow. Let's take a look at the XOM, ExxonMobil here. What ExxonMobil has done today is ExxonMobil has broken just a small little consolidation pattern out here. This was consolidating from about April 28th through yesterday. When it broke through that consolidation, that gives us a little bit of a measured move if we want to take a look at that, equal to the consolidation. Now, it did look like what ExxonMobil wanted to do was to move all the way up to the highs out here at the 105.15 range to make a 1.272-ish butterfly pattern, but it failed to do so. At this stage, what ExxonMobil is communicating to us is with the break of this shorter-term consolidation, it says that price ought to move down. That's unless it gets back inside there. And what we can see here, what it did this morning thus far, is it tried to get back inside the consolidation by getting up to a high of 100.32. If it can close above 100.32, then the break was false. If it stays below that level, then what we're likely to see is ExxonMobil pull back into the I'd have to say probably right into this little base area here, the top of 96.50-ish or so, the March 27th high out there, to right around 97.60 or so. And that's right now what ExxonMobil is communicating to us. It's more like the $97 area that it wants to pull back to. And that means we should go take a look at the S&P 500 sectors. But let's take a look at, not until we take a look at Intel. I mentioned the SOX earlier was on a tear out here. Well, let's take a look at what Intel is doing. So up above its B point of potential A to B equals C to the upside. That is the 59 million share day on April 16th. On Friday, got above it with 43 million. So light on volume. Yesterday was 20 million, even lighter on volume. So it is not a confirmed A to B equals C to the upside. Nonetheless, it does not mean that it cannot complete that pattern out here. That pattern also would go ahead and give it some form of a butterfly pattern. Let's take a look at where that would be. And we're taking a look at expansions of swing points. Those expansions being the high of January 15th, that price level, 27.12, down to the low of 23.52, the trading session of February 5th out there. A 1.272 expansion of that area takes you to 28.10. 29.34 is a 1.618. Let's take a look at A to B equals CD patterns that could be forming out here. There's no other way to call it, even though it is unconfirmed. plausibly deniable. Let's take a look at it. Yeah, that would take you up to the 1.618 level. Just the 1-to-1 takes you to 29.48. That would set up a 1.618 butterfly sell. But we do know that Intel is up above a swing point on lighter volume. It's never really great news, especially since it is in the overbought condition out here. Nonetheless, it is still looking pretty bullish otherwise. If I take a look at no 3 drive to a top pattern, let me see if that was even a expansion of a swing point. That's actually, I can probably do this more clearly on the daily chart out here. Yeah, I'm sorry, the weekly chart. So from a cycle standpoint, I'm going to assume that it looks like about a 1.272 expansion, but we'll find out. The cycles I'm looking at are on the weekly chart. The week ended June 7th. The week ended January 17th. And that was 2014. That would take all the way to August of 2014. So let's see if that pattern actually would, this is what it would need to do. Let me come down here. Let's see what the expansion would look like. And this would be your, what the heck am I doing? That was basically foolish what I just, I somehow, nah. There's not even there's no 3 drive up to a top pattern. Well, boy, that looks like a lot of hogwash, doesn't it? Let me take this back here. Let's just do this. There is all the way to August. Yeah, I'm gonna sit here and say I don't think so. I mean, it just needs to get to 28.18. You're at 27.48 right now, or it's hit 27.48 right now. So, yeah, maybe some other pattern out here, but it's not going to be a 3 drive. I don't think it will. Between now and August, only move a total of less than 50 or 60 cents. That is Intel. It could happen, but I don't think so. In any event here, so much for that gobbledygook, because that most certainly was it. Let's take a look at what's going on inside of the S&P 500 sectors. Specifically, let's start off by taking a look at the XLE. See what the XLE has done here. No bearish reversal signal here as of yet inside of the XLE. I wanted to take a look at that because of the chart we looked at on ExxonMobil. So just for the heck of it, let's go take a look at Chevron. CVX is the ticker symbol because I believe it's ExxonMobil and maybe Schlumberger. Well, this does not look good here in CVX's case. Huh. Let me get rid of a couple of these. So we see here in CVX, it went ahead and completed a 1 to 1.618, A to B equals CD to the upside. Gave you a little reversal signal as it did that little shooting star candle here on April 29th. So we're seeing a pullback right now. Let's get rid of the A to B equals CD pattern. Let's just take a look at retracement level, see what it's attained here thus far. Not made it to the 0.382 retracement, which is 120.39. So it looks like Chevron Mobile, Chevron Mobile. Hey, I guess I just merged the two companies. Looks like Chevron just is headed to the 120.39 area. 200-day exponential moving average happens to be priced out at about 119.93 out here volume-wise. It's interesting. It took out a B point of an A to B equals CD to the downside. Very interesting. Let's take a look at Chevron Mobile. So we're going to go take a look at what's holding up the XLE out here. Let me put up the Rhodes momentum indicator out here. I've got the entire XLE. Let me do this. Give me a moment here to put that up. I've got to create a little market analyzer out here. We want to see what's bullish inside here. Let me load this thing with one of my templates. Now, let's look at this on the time frames we want to look at. Let's look at it on the weekly and daily, monthly, weekly, daily out here. So let's just so here's what I'm going to do. This is a little tool that I use to help us understand what's going on with regard to the trends inside the market. And the instrument list that I'm going to put in here right now is the XLE, all 44 of them. Even though, well, if you want to, here, let's do this. Let's do this first. Let's do the XLE holdings that represent about 60% of the actual structure. And that is represented by 2, 4, 6, 8, looks like about 10. Anadarko Petroleum, ConocoPhillips, Chevron, EOG, Halliburton, National Oil Well, Varco, Occidental Petroleum, Pioneer Natural Resources, Schlumberger, and Exxon Mobil. And let me just, okay, got that off here. What this is doing for us, what I can do is I can blow this up on my screen here. If you give me a moment, I'll go to Properties, and I think I can do this in the font. I know I can do this. I know I can do it. It's like the little engine that could apply this puppy. There we go. Okay, so now, of course, now it's got to go back and recalculate it because I've changed the template. But that's okay. This will be a little bit easier for you to take a look at. So what we're doing is we're looking at each of the holdings. Let me count them exactly. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So 10 holdings, the top 10 holdings with inside the XLE. Now, look, I haven't updated this for maybe a month or so, but the top 10 holdings represent about 60% of what's going on inside of the XLE. Now, we're looking at the monthly, the weekly, and the daily trends out here, trying to identify the most bullish, most bearish signals out here. And we can see on the weekly and the monthly, everything is good except for EOG Resources. EOG Resources looks pretty darn bad. We saw National Oil Well Varco, I believe, yesterday start to become hammered out here. So it's been drinking a little bit too much snake oil is my guess out here. So it's now starting to look a little bit bearish. So bearish, Chevron, like we just looked at, ExxonMobil, so the two out there, and National Oil Well Varco. So that's what is putting a little bit of pressure out there, but their message is more bearish than bullish. You can even see that here using the Rhodes momentum trading strategy and signals out here. However, the other 7, which is what's holding up the XLE, Anadarko, ConocoPhillips, Halliburton, Occidental Petroleum, Schlumberger. So let's go take a look at a couple of these stock charts. Let's go see if they're showing us anything. I'll move that off the screen out here. Let's do this here. Let's go use one of the other Rhodes charts out here. This is where I've got the weekly and the daily. Excuse me. And so let's do this first with the SLB. And why is it them focused on the XLE? Well, it's because two of the largest weighting structures within there are giving us bearish signals, and the question is, are they going to be able to pull anything down? I don't know the answer to that. If we take a look, but we're looking for some signals here inside Schlumberger. So Schlumberger, it's got. Let me get my crosshair out here. It had a little shooting star reversal pattern back in April 29th, but it's above. Well, is it above that area? The price there, that candle. Well, click on that for me. Oh, stop it. Click on that for me. The high is 101.91. That's it's up above that area, so that should become potential support. So Schlumberger is looking fine. There's no real signals here on the momentum strategy that shows Schlumberger with any real problem out here. Let's take a look at Occidental Petroleum. OXY is the ticker symbol out here. Occidental yesterday forming a little bit of a doji candle, but it is fighting that off, so that's not a big deal. If we're to close a little bit lower, that could be sending a bit of a message that it wants to pull back a bit. Where could it pull back to? 96.51 could be an area. It's 50-day exponential moving average, but Occidental Petroleum looking pretty good, looking pretty strong out there. So no wonder. Let's take a look at EOG. EOG is on the weekly chart. That should have some struggles, but let's take a look at what the daily chart is. Oh, this must have been some type of stock split or something, and this system here did not take a look at it, or that was just simply a really huge gap down. I don't think that was the case out there. So my apology. I'll have to go pull up a different chart for that. Let's look at ConocoPhillips. So COP is the ticker symbol. That is what kind of signals we have out here. Anything? So it's got a little shooting star out here and a key reversal session yesterday. Shooting star was back on April 28th. That says the high of 79.84 is resistance. In fact, that area has been tested here. If we blow this up, was yesterday a key reversal session. Let's see, June 2nd out here. That was low was 79.05. No key reversal session inside of ConocoPhillips. So really, it's just primarily it's a Chevron, it's National Oil Well Varco, and ExxonMobil. Only things really struggling inside the top 10 holdings inside the energy sector. Dow's off 43, S&P down 4, NASDAQ off 8. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow is off 45 points right now. S&P is down 4. Composite off 11 points out there. Now, the composite had staged a nice little comeback rally here earlier in the trading session. So it's been a little bit of a yo-yo up, down, and all around. You know, if you caught the first hour, the Trader's Edge show, the 9 o'clock show that I kick off, we were taking a look at the Euro-Japanese yen. I'm putting that on my chart here right now, the 120-minute time frame. It was completing a 1.272 butterfly pattern. Now, that was as we came on the air at 9 a.m. It was doing a nice wide-ranging bar. I said, well, you know, maybe by 11 o'clock in the morning we would know. Wide-ranging bars, when you come into when you complete any pattern, whatever pattern it is you're trading, I don't care what it is, and you're coming into it with a wide-ranging bar, you really should respect that wide-ranging bar. It is the bulls and the bears really communicating to you. Wide-ranging bars, oftentimes markets do not end on wide-ranging bars out there. That doesn't say that they can't. It's just that they likely don't out here. Now, because this session here ended at 9, at 11 o'clock right now, we don't have a reversal signal for this pattern here inside the 1.272 butterfly. A reversal signal being even a dark cloud cover candle. It has not even been able to, it's close. But it is no cigar out here. It could do a lot in the next 5 minutes out there. But, that type of, the scale of that type of reversal signal on a scale of 1 to 5, 5 being the strongest, dark cloud cover is kind of like number 2 out there. So it's I consider that if you've ever lived in Florida, and I don't know what it's like in your area, but I know in Florida, the weather forecasters, they give you the best they can a forecast of what it's going to be like. But you could actually stick your head out the door many times and say, what the heck are you looking at to give me that kind of forecast? So a dark cloud cover is a weak reversal signal. It is a reversal signal to pay attention to, but so what's all this jibber jabber mean? Look, we've got a 1.272 butterfly. Prices in the overbought condition. A normal pullback inside this currency pair here would take you down to about 138.60. You're at 139.50 right now. From a directional standpoint, the message here is additional pressure throughout the trading session today, tomorrow, unless, in fact, the Euro-Japanese yen decides to take out this area. So that's really setting up the potential for the nice buy in what's going to be a nice long summer rally, or should be, until we see indications otherwise, and I haven't seen those indications here, not at least yet. If we take a look at the VIX index here, the VIX index traded 1196. It opened just slightly underneath that at 11. It opened at 1203 actually. So the VIX here, watch the VIX if in fact it continues to move higher. I suspect that it will, as it moves higher into that 1311-ish area, the 50-day exponential moving average. That's going to be a key level to watch. If you're long and strong and the VIX is trading above that, make sure you tighten your stops even further. And if you don't use stops, well, God bless you. Good luck to you. It is not the appropriate way to be managing that money that you work so hard for. So make sure you've got stops in on every single trade that you make. And if you're not familiar with that, get familiar with it. You really need to do that. So we've got the VIX. We've got the New York Stock Exchange. We didn't take a look at the New York Stock Exchange here. It needs, in order for the bears to actually take control of it today, it needs 522 or more net declining issues. We're at 966 right now, net declining issues. So the Bears have got the opportunity right now to come out of their cave and show us what it is that they've got out here. Folks, I can tell you someone who's going to come out of their cave. It's our man Basil Chapman. He's up next. It is Terrific Tuesday. That means we've got the Options Hour after Basil's show. Then we've got Daryl Martin, David White, Andy Heck, the Tom O'Brien Show from 4 to 6. Great to be with you this morning. Have a great Tuesday, folks. I look forward to seeing you on Wonderful Wednesday. Take care now.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.